Hi everyone, my name is Mark Quinn. I'm a tax advisor and chartered financial planner with the Spectrum IFA group based in Portugal. And in this video, I'm going to be looking at 20 ways to save tax as a Portuguese tax resident. So the first 5 points on the tax saving list actually happen before you arrive in Portugal. So before you become a Portuguese tax resident, you want to be doing the following. So the first one is review your asset base, making sure that you review your pensions, your investments, different structures you have to make sure that they work for Portuguese tax residency rather than where you are at the moment. So I've spoken about this on previous videos. Individual savings accounts are a classic example. They are tax efficient from a UK context. They don't work here in Portugal. They're going to be taxed under capital gains tax rules. So it would be a good opportunity for you to surrender your ISAs prior to leaving the UK because you can do so tax-free. If you wait to reorganise your affairs after you arrive here in Portugal, you're going to face potentially quite high tax. Okay, point 2 on the list is making sure that you utilise any allowances in your current country of residence. So again, using the UK example, utilising any remaining income tax allowances you have, plus any annual capital gains tax allowances that are still available, plus any losses that you haven't utilised. Another example would be, for example, Singapore and UAE, they don't have capital gains tax at all, so it gives you the opportunity to review and possibly utilise any or wash out any capital gains before leaving those countries. If you're in the UK, you should be utilising your 25% pension commencement lump sum, which was previously called tax-free cash, because when you leave the UK, that's not available as an allowance. So if you wait until you become a Portuguese tax resident, you're going to pay tax on that 25% portion of the fund. Point number 4 is if you're moving from the UK and you're not originally from the UK, so you have a non-UK domicile, then you have an additional choice and allowances available to you by using what's called the remittance base of taxation, which can work particularly well. So make sure you're reviewing that aspect of your affairs prior to departing the UK. And the final point to be aware of before leaving the UK is if you have a pension scheme and it's at or close to the lifetime allowance, which currently is just above £1 million, £1 million, consider lifetime allowance protection. Now, some clients mistakenly believe that it's no longer possible, but depending on the values of your pension funds, it may still be possible to elect LTA protection and potentially save yourself tens of thousands of pounds. So the next 15 tax saving tips are related to life after you become a Portuguese tax resident. So we previously looked at planning before you arrive. Now we're looking at the points that you should be thinking about when you arrive here. So the first point you should be thinking about when you arrive here in Portugal is applying for the non-habitual residence scheme. I've said this in the past, but in 99% of cases, it's a financial no-brainer to do. It benefits almost everybody I've spoken to. There have been a handful of clients I've spoken to where it's not benefited, but their situations were quite unusual. But do take individual advice. Following on from that, if you are going to be applying for the NHR scheme, make sure you're structuring your affairs to sync with that scheme, because it's not an automatic tax-free scheme, and in many cases you may still be paying taxes under the scheme. So you've got to make the scheme work for you, and you do that by reviewing each element of your affairs and optimising it for that 10-year window period and even beyond the 10-year point. Use tax wrappers. So holding investments directly can give rise to unnecessary capital gains tax and income tax. Now, the capital gains tax rate here is a flat 28%, as is investment income. Now, by holding the investments in some sort of tax wrapper, you can mitigate a lot of that tax. So again, it's a financial no-brainer to use some sort of wrapper, be it a pension, an offshore bond, company structure, and the suitability of each of those, again, will depend on your personal situation. So point 9 is looking to deplete pension schemes. Now this is a strange one really, because conventional financial planning wisdom and good practice would mean that as a general rule you want to maximise the value of funds in your pension scheme, and the reason you do that is primarily because it's always outside your estate for inheritance tax purposes. But if you're coming here under the non-habitual residence scheme, which as I said in the previous point 99% of you will be doing that, you have this 10-year window to get out of your pension scheme at a flat rate of 10%, which can be very, very attractive. So there's a bit of a trade-off here, and it's one of income tax efficiency for you during your lifetime versus inheritance tax efficiency for your beneficiaries. And again, it comes down to a personalised assessment of each family's position and their objectives. Also be aware of the fact that pre and post April 2020 NHR members are different. So if you are a resident here already and you qualify for the pre-April 2020 NHR scheme, then there are some nuances to that scheme, which means that you have to be careful when you're taking income from the pension scheme, and please contact me if you want more information on that particular aspect. You also want to be doing things in the correct order. So an example of that would be if you realise losses first, for example on some investments, you can carry forward those losses to offset against capital gains in the future, but the reverse doesn't necessarily apply. So if you realise the gains first, you can't then subsequently use future losses to mitigate those gains. So again, the next point is actually related to order, and that's timing aspects, but it's slightly different, because by timing I mean the point in which you take income from certain parts of your affairs. An example of that would be if you're holding offshore bonds, ideally you want to try and time the withdrawals, or certainly the large or bulk of the withdrawals, to occur post the 5 and 8 year points, because that's when the tax reductions kick in on those types of investments. Point 13 is in respect of making sure that you're targeting different parts of your affairs appropriately, because that will save you tax over the long term. Again, an example would be targeting income withdrawals from the pension in the first 10 years and then maybe switching to bonds later, by which point you should be into your maximum 8 year tax break or tax reduction. If you have UK property to sell, be aware that as a non-resident now, you are subject to a special exemption, and it's called non-resident capital gains tax rules. And that means that if you have a property to sell in the UK that you acquired before April 2015, any appreciation in the value of the property before that is completely washed out. So you effectively take the market value of the property as of April 2015 as the cost of your property. That gives you a window of opportunity during your NHR period to dispose of any UK properties at quite low tax rates relative to what you will face in the future. After the 10 years, because this is a concession that will only apply during the 10-year period, you revert to being a Portuguese standard taxpayer, at which point you'll pay 28% tax on the property gain here, with a credit for any tax paid in the UK. So point 14 was in respect of sales of UK property. Point 15 relates to reinvestment relief on sales of your main home here in Portugal. Now, unlike in the UK and other countries where the sale of your main residence is actually free of tax, in Portugal it's taxable. And there's several ways of avoiding it. The first one is by reinvesting in another property within the EU, and the second is either investing in an approved investment or pension structure, which we can advise on. So if you are, for example, downsizing, so you don't necessarily want to reinvest a full amount into another property, we do have solutions available for you. Just note here that you can submit joint tax returns in Portugal. You don't necessarily have to be married, but you can utilise each other's tax bands to result in an overall lower tax bill. Take advantage of Portuguese tax reductions. So if you use your NIF number, your Portuguese tax number, when you're purchasing certain goods, you can get tax deductions from your final tax bill at the end of the year. Also, Portugal does have personal annual allowances. They're not as generous as, for example, the UK, relatively low compared, but they still are available, and between a couple it can add up over time, so you can offset around €4,100 each against employment income or pension income each year. If you are still working, review the structure of your work. So there's several ways of working as either a self-employed contractor, an employed person, or even using a company structure to take income from in Portugal. And each one of those will have pros and cons, and you've got to weigh up each, especially in relation to the social security aspects, not just the income tax aspects. And that leads me to the final point, which is, if you are drawing income from a company structure, for example, consider the use of dividends, especially under NHR, because under NHR, if you're drawing dividends from, say, a UK company, the dividends are going to be tax-free, and also they have no social security liability attached to them. Whereas if you're paying yourself a salary from the structure, you will have social security contributions on those, and you will pay income tax as well. So again, just review that position. A lot of people have that system set up because it works from a UK context, for example, but it's not necessarily appropriate for Portuguese employment, tax and social security laws. So I hope you found those quick tips useful. If you've got any suggestions for any topic ideas for future videos, please let me know. I'd also be grateful if you could like and subscribe to the channel. Thank you very much. Bye bye.